morning and welcome to NYSE TV Live. I'm Kristen Scholler, and today American Eagle Outfitters, which trades here at the stock exchange under the ticker symbol AEO, celebrates 30 years since its IPO by ringing the opening bell and kicking off another eventful session on Wall Street. Well, here's what's on tap over this next hour of our live show. That two-day Fed meeting, the biggest economic policy event of 2024, starts today with the central bank delivering its decision on interest rate cuts tomorrow afternoon. Now, with the Fed expected to cut rates for the first time in more than a year, B. Riley Wealth Management chief strategist Art Hogan is going to reveal what investors are pricing in. Meanwhile, as American Eagle does get ready to ring the iconic opening bell, we'll speak with Bankrate Ted Rossman about what the potential rate cuts mean for the consumer and shopping habits during the fall and holiday seasons. And after the opening bell, I'll be speaking with Jennifer Foyle, President and Executive Creative Director of American Eagle and Aerie, about a pair of campaigns that she is engineering with both brands. Well, this past summer, American Eagle launched the Live Your Life brand platform, and that employs some serious star power to bring new energy to the campaign. 2023 U.S. Open tennis champion Coco Gauff and Jacksonville Jaguars quarterback Trevor Lawrence are among the headliners of this year's fall campaign. Well, just last month, Gauff debuted her first ever fashion collaboration, which includes tops, a denim skirt, jeans, and a denim jacket with the quote, "Thank you to the people who didn't believe in me." Now, American Eagle says that denim accounts for about 40% of the company's sales, so it certainly makes up a large portion. Meanwhile, another brand under the American Eagle Outfitters umbrella is Aerie, focusing its energy on the Aerie Real campaign. Again, we'll be speaking about both of those. The brand, which debuted the campaign in 2014, does aim to challenge traditional standards of beauty and wants to empower women to be confident in their bodies. Features models of all sizes in Photoshop-free images. The Aerie Real campaign features the collection of bras, underwear, and apparel while promoting the message that the real you is the best you. In just a few moments, we'll bring you to Freedom Hall for exclusive coverage of American Eagle's CEO, Jay Schottenstein's remarks before he and the executive team make their way down to the iconic New York Stock Exchange trading floor and celebrate the opening bell. Schottenstein has led American Eagle for more than 3 decades, paving the way for the company's first signature denim line in 1997 to well over $1 billion in annual jean sales. Well, before we take you there, I want to dive into the biggest economic policy event of the year, the September Fed meeting, which starts today. For more than a year, the Fed has held interest rates at a more than 2-decade high of a range between 5.25 percentage point and 5.5% in an effort to tame inflation. Well, tomorrow on Wednesday, the central bank is expected to announce that it will finally be cutting borrowing costs. At the end of Monday's session, the CME FedWatch tool, which analyzes the probability of Fed rate moves for upcoming meetings, is pricing in about a 65% chance of a 0.5 percentage point cut. Meanwhile, the tool is pricing in just about 35%, or roughly a third, of a chance of a 0.25 percentage point cut. Now to dive deeper, Art Hogan, Chief Market Strategist for B. Riley Wealth Management, joins me. Art, it's always a pleasure and great to get your insight on a very important week here on Wall Street. With all eyes on that Fed decision on Wednesday, what are you expecting?
Yeah, so I think that what's interesting here is the market is actually probably ahead of the Fed in terms of how far they actually go. So we've been basically at a coin toss for most of the last couple of weeks, and that's starting to edge into a bit of a consensus that they go 50 basis points. Now, what I think they should do is go 50 basis points. What I think they will likely do is go 25 basis points. And I think this is a Fed that has liked to start out a bit slow when they shift directions. When they started raising rates, they went 25 basis points, even though inflation was north of 9% on the CPI, and then they started picking up the pace. I don't know that it matters one way or the other if they go 25 or 50 today. I think what really matters is what they tell us in their summary of economic projections about the destination. How many times are they going to cut, and where do they see the neutral rate? We'll get more information. So I think you can really tell a tale about the destination and how far we're going versus the first step that we took along that path. So I'd rather see them go 50 basis points, but I think either is okay for today. But the summary of economic projections telling us that we're likely going to see 100 basis points this year and at least 125 or 150 basis points next year is much more important than what they actually do today at 2 o'clock or tomorrow at 2 o'clock.
Art, I lost a bit of your audio there. I hope our viewers can hear you loud and clear. It just kind of trailed out at the end, but I'm sure we'll get it situated here. For our viewers watching at home, I hope that wasn't the case for you. But Art, circling back to this rate cut and how important it is, we did get August retail sales data out earlier this morning. How does that factor into the Fed's decision?
Well, the good news is it was better than expected at the headline and very much in line with expectations throughout the rest of the detail. That it has slowed a bit on a month-over-month basis, but it certainly continues to show that the consumer continues to be aggressive and out there, but actually seeking out more value. So over the last couple of months, when you look at the breakdown in the internals, you're certainly seeing investors that are favoring things like Costco, Walmart, and TJX. But I think that's a very healthy thing. So the consumer is very important to the U.S. economy, nearly 2/3 of our GDP. I think today's report doesn't change what the Fed does necessarily, but certainly reinvigorates the fact that they're still inside that zone of a potential soft landing.
So, of course, those retail sales data coming in better than expected, Art, and we could potentially see some volatility in the market after that Fed decision. Do you think the Fed is behind the curve? That's such a common question asked, especially as we debate whether it's a 1/4 percentage point cut or 1/2 of a percentage point.
Yeah, there's actually people that on the Fed that were voters that said they were willing to go in July. I think once we started to see the softening of the labor market, that was the clear signal that the Fed needed to shift their focus to their other mandate, which is full employment. They took a pass in July, which is why I think they should go 50 basis points now. Just to put that in perspective, we've gone from creating about 170,000 jobs on a 3-month run rate basis to 116,000 jobs. While that's still inside that window of acceptability to keep things status quo and keep employment full, which is anywhere between 100 and 150,000 jobs, it's certainly getting closer to the lower end of that. So, behind the curve, should the Fed have cut in July? I don't think they felt like they prepared the markets enough to do that, but I think had they done that, there would be no question about the fact that they could go 25 basis points July, this meeting, November and December. So I think a little bit of a catch up or front end loading this would probably help them get back, into the right place. And whether that happens now or one of the next 2 meetings, I think it's going to be important to get 100 basis points under their belt before the end of the calendar year.
So it's interesting, Art, because I know you mentioned the destination is important here, what we hear from the Fed in terms of planning for future rate cuts and perhaps what that ultimate end is for rate cuts in the economic cycle. We spoke about retail sales data out earlier today. What else is the economic data telling you about the state of the consumer and the health of the overall economy?
Yeah, such a great question. So the good news, I think, is that while the labor market is softening or normalizing, I think you also have a consumer that continues to spend, but in a way that is much more value focused. And traditionally, this has been the American consumer's way for decades now. So whether we look at Amazon or a couple of the new Chinese offerings and Temu and Shein, or you look at companies like Costco and TJX and Walmart, that has been the dominant player out there to the detriment of some of the dollar stores. Now, I would offer up that if we have finally gotten to the point where wages are going up more than the rate of inflation, the consumer's doing okay, still feeling the pinch of higher prices, but doing okay. If you look at GDP growth rates this year, last quarter was 3%, this quarter is at a 2.5% run rate. So GDP is running up ahead of its potential, which is another positive. And earnings for the S&P 500 look like they're going to be sequentially better both in the third and fourth quarter. So to the extent that the market is in okay shape, it's time for the Fed to start normalizing and becoming less restrictive. And I think we'll learn a whole lot more about that Wednesday afternoon, both in the summary of economic projections, in the press conference, and certainly in their statement, where we're going to see multiple changes. I think the consumer's in okay shape, but we certainly don't want to see much more degradation to this labor market. And Jay Powell talked about that at his speech at Jackson Hole.
Do you think the so-called soft landing is still possible, Art?
100%. We're right in the sweet spot for that, right? So we got GDP growth that is normalizing down from 3.5% in the back half of last year to close to 2.5% this year. So that's normal and sustainable. We've got unemployment that's come up from 3.6% to 4.2%, certainly sustainable, right? And to the extent that a soft landing actually means that, you need to see inflation come down, you need to see the labor market loosen up a little bit. The problem is normalizing and then going too far and then getting into where we're in an economic slowdown is a very fine line, and that's why monetary policy needs to step in and certainly keep track of all of the moving parts and get us to the right place. But yeah, I think the soft landing course is still on path, and it's just a function of the Fed nailing the landing and not dragging their feet too much and getting to that neutral rate sometime next year.
Certainly, as we head into the fall, Art, after the first debate between former President Trump and VP Kamala Harris last week, I think a lot of people are asking the question, does politics play into the economy? What might the election mean for the overall economy and for stocks? What's your response?
Yeah, that seems to be everybody's question right now. And what's interesting is it's always about, when we're in a presidential election year, it's, his policies versus her policies, and what does that mean for economic growth? And we kind of have to take a step back and remember that what you say on the campaign trail is very difficult to put into practice unless and until you have control of Congress. And all of the polling look like that's not going to be the eventual outcome. So to the extent you can say a whole lot of things about tariffs or cutting taxes or raising taxes and different kind of fiscal policy programs, but you have to get that all passed through Congress. I think that the likely event is agnostic of who's in the White House. Congress is going to be divided, and I think that's something the market can celebrate and likely won't cause any major shocks to the market.
In terms of what we hear about the destination on rates, how do you see that playing out in terms of how many cuts we might get, and if what matters to the Fed changes? In the latest meeting, of course, in July, we had heard that finally, after 2 years of inflation being in focus, it really was a dual mandate matter, and jobs data matters too.
Right. I would say the jobs data finally matters more than inflation data. I think inflation was last year's problem. I think we're getting close in the glide path to their target. It is certainly on track. So they do not want to see the softening jobs market continue to soften. That's why the focus now is on their second mandate, which is full employment. And I clearly believe the path to getting to that is to cut rates by at least 100 basis points this year, and then probably by 150 basis points next year. And it really doesn't matter what the increments are to get there, it's the destination. We need to get the Fed funds rate down to what is likely the neutral point, and that probably sits somewhere between 2 3/4 and 3%. So that means we've got 200, 250 basis points of cuts coming, and hopefully they happen over a shorter period than 2 years. We'll see a lot more about that, or where the FOMC is thinking about that, when we get that summary of economic projections, which includes that dot plot. And we'll likely see what they're thinking right now about how much they're going to need to cut over the course of the next 18 months.
Art Hogan, Chief Market Strategist at B. Riley Wealth Management. Art, always a pleasure. Thank you so much.
Great to see you.
And as we await the opening bell, we do want to take a look at remarks from Freedom Hall. They're underway. Here's an exclusive look from Tara Jejic here at the Stock Exchange.
George Washington. That is the location of the first capital of the United States. It's where our first president took the oath of office. The Bill of Rights was ratified. Supreme Court and Congress met for the first time. And importantly, Alexander Hamilton penned the report on the federal credit and started the Treasury Department. So our country, our economy, and our markets literally grew up at the corner of Wall and Broad Street, and at the cornerstone where you are today. We're here to celebrate you and all of your achievements. So without further ado, I would like to welcome Jay Schottenstein to the stage. Yeah.
Okay, first of all, thank you for having us. Like you said, it's been 30 years since we went public in 1994. I felt, it wasn't too long ago. But really, it's really a special honor to be here because, as Terry was saying, this is where it all starts. This is where capitalism, this is the beacon of capitalism. And without capitalism, we couldn't have grown our business. And when we went public, it gave us an opportunity to bring more capital in the company, open more stores, open more distribution centers, and like you said, to grow the different brands. And so we're extremely proud to be here. This is my third listed company on the New York Stock Exchange. Because originally we went on the New York Stock Exchange originally in 1991 with Value City Department Store then, and then in 2005 or 6 I went with DSW public, and then after that I took American Eagle into the New York Stock Exchange. So at one time I had 3 companies listed. I was chairman of 3 companies at one time on New York Stock Exchange.
We welcome you to repeat that. You can do it again.
Yeah. So before we start with the honors, with everything, we're in a special month in the Jewish year. This is a month where we prepare for like the New Year's. We have awakening, so it's very good. It's very good mazel. We call it very good luck to be able to blow the shofar, which is an awakening. So just bear with me. I blow it every day during this month. Now we can start.
Thank you for that.
No, thank you.
Okay, so our first president was sworn in 1789. 3 short years later, the New York Stock Exchange was founded in 1792. Over the last 232 years, we have developed a few traditions. We do not like our bell ringers to go away empty-handed. So, Jay, I have a gift for you today. I present you with this medallion. On the front of the medallion are the 6 pillars in front of our facade. We believe they represent transparency, opportunity, sustainability, capital, innovation, and community. And we are just tremendously proud that American Eagle Outfitters is part of the New York Stock Exchange community and here to celebrate 30 years with us today.
Thank you.
Great. On the back, there's the buttonwood tree. So as you talked about access to capital, as you expand to new geographies and create new products to serve your customers, the buttonwood tree is a tribute to our founding document, which was signed in 1792, but it's also really a testament to understanding deep and strong roots, but continuing to grow and expand and innovate. So everyone here will get a smaller version of Jay's medallion with this coin. We hope that you take this with you and remember today and what a phenomenal milestone it is as a 30-year public company.
Thank you. We have a gift for you, too.
Oh, wow.
That's yours right there.
Oh, my goodness. It can't get better than this jacket. I know denim. Denim's a big part of your business.
Big part?
40%?
This way. Our goal was back in 1992.
Oh my goodness, I'm trading jackets. That just happened. We are trading jackets. This is remarkable. Thank you. That's gorgeous. Thank you. Custom. So all of the things we just talked about, the importance of the building, this is the importance of partnership. So one last gift before we go down, if I can have you come this way, Jay. This is a 30-year anniversary certificate. Look at Courtney real quick. So this really commemorates that not only have you been public for 30 years, one of the greatest companies on the planet, well-governed, but you're also a part of our community. We hope that you hang this on a wall in Pennsylvania somewhere. And
No. We have a new office open next spring, like here in on Madison Avenue and 6th Street. Put it there.
Wonderful. Thank you. Okay. Now, Now, for those of you watching NYSE TV live broadcast, I'm going to pass it back over to Kristen Scholler.
Well, we just heard from American Eagle Chair and CEO Jay Schottenstein in the Freedom Hall, those exclusive remarks, and I do want to bring in my colleague Trinity Chavez. Trinity, we've seen so many retailers and executives come through these very walls. What did you make of his remarks?
I mean, I just loved that little scenario where he was blowing into the flute. I have to say that was the first time I've seen that. But you know, celebrating 30 years of being a public company. This is a company that's been around since 2007, 47 years, achieving such milestones, especially with the development of e-commerce. I actually, was doing a little bit of research, and in 2023, the retail sector generated more than $5.5 trillion and employs over 32 million jobs. So I mean, this sector, the retail sector, is huge. And American Eagle, companies like American Eagle are heavily contributing to that success, especially when it comes to apparel specific. Statista Worldwide experts predicted that the revenue of the apparel industry within retail is estimated to be $1.7 trillion just in 2023, and anticipate that come 2028, it'll be over $2 trillion. So I mean, again, companies like American Eagle, hugely significant moment, achieving 30 years of success, and we're a part of it.
And a great time to come to the stock exchange and celebrate 30 years as a public company as well, because we know back to school season has started. Before we know it, the holidays are going to be here October 1st. Yeah. These days is sort of the unofficial start to holiday season. So we'll be able to talk to an executive at American Eagle and Aerie about where they go from here, how those holiday discounts might ramp up. And of course, if you are a consumer, the best way to navigate holiday shopping. Trinity, anything else on your docket regarding American Eagle? Well,
I have to say, I can't wait to see everybody outfitted in denim on the trading floor in just a little bit when we go down there. I mean, I was a little bit jealous of Tara's denim jacket in Freedom Hall, but again, this company, denim specifically, accounts for more than 40% of their revenue. So again, this is a huge milestone for them. Right here in the United States, $320 billion when it comes to clothing and apparel, and again, the 40% accounting for their revenue. That's it's a huge piece of their business, and so I'm looking forward to seeing everybody outfitted in their best denim look on the trading floor.
Likewise, Trinity, you and I will see each other on the trading floor in just a moment.
Yep.
But we've got plenty more to get to as American Eagle does get ready to celebrate that opening bell. Stay with us.
DriveWealth is a brokerage as a service provider, and we build technology through a set of modern APIs that allows our partners around the world to build trading functionality into their apps. And the trading functionality can be as simple as self-directed stock trading or a managed portfolio that rebalances, to something more sophisticated and innovative like swiping a credit card and rounding up the purchase to the purchase of a slice of stock.
Can you tell me more about your clients and companies that make up your B2B client base?
We actually have a pretty extensive global footprint of clients. The majority of our clients are actually located outside the US, but trading US stocks, originally mostly equities, but we've expanded our asset classes to mutual funds, options, and fixed income as well. And we have partners like banks and broker-dealers like BTG Pactual in Brazil, wallets and sort of super apps like Cash App in the US or Toss Securities in South Korea, Revolut in Europe, and asset managers like MoneyLion and consumer applications.
How many investors would you say that you serve?
We serve millions of clients directly on our platform, and through the user bases of our partners, those are measured in hundreds of millions.
Can you explain more how you make, investing more accessible for smaller investments?
You can invest notionally, so instead of saying I want to buy 1 share of Apple, the users can say I want to buy $1 of Apple, and what it allows you to do is buy a smaller.
Welcome back to NYSE TV Live. Earlier, we talked about what Wednesday's super important Fed decision will mean for you as an investor. but certainly it's going to have an impact on the consumer as well, whether you own a home, want to be a home buyer, or are simply swiping a credit card. Ted Rossman, Senior Industry Analyst at Bankrate, joins me now with more. Ted, it's great to see you this morning. We had those retail sales data out earlier this morning, the consumer remaining resilient. What do these rate cuts mean for customers?
It depends on the product. We're going to see the biggest difference for mortgage rates. In fact, we already have. Last year around this time, the average 30-year fixed mortgage rate briefly hit 8% for the first time in a couple of decades. It's already fallen to 6.3%, and that makes a meaningful difference for somebody looking to enter the housing market or even refinance if they've bought within the past couple of years. I mean, on a $300,000 loan, the difference on a monthly basis is more than $300 if that rate falls from 8% to 6.3, which it already has. Maybe a year from now, mortgage rates are in the mid fives. We're not going back to the 3s or 4s that we saw a few years ago anytime soon, but still, we're moving in the right direction.
Moving in
now,
the right.
for other products like credit cards,
Go
not
ahead.
as much difference. The average credit card rate right now is about 20.8%. If that falls even a few points, which could take years, you're still talking very high rates. So I see housing as the biggest benefit.
What are the best ways for consumers to prepare for this, Ted, in terms of holiday budgets, knowing that rates are expected to come down a little bit, and what it means for their spending?
We recently did a holiday shopping survey, and we found, well, for one, people are starting early. About half are planning to start their holiday shopping before October 31st. But the other big thing is that people are in a frugal mood. Only about 1 in 4 holiday shoppers plans to spend more this year than they did last year. 1 in 3 plan to spend less, and everybody else is about the same. We saw something similar last year. Inflation has been weighing on people. Even though inflation's come down, there's a cumulative effect, of course. I would believe that a lot of people are going to be seeking discounts this year. They're going to be starting earlier. Retailers are leaning into this promotional season. As you mentioned, October 1st is kind of the unofficial start. And I would expect, they haven't given a specific date yet, but Amazon Prime Big Deal Days is often something like the second week of October. Target, Best Buy, Walmart, they all have their own versions of this. It's a season of deals now. You don't need to wait until Black Friday or Cyber Monday. Retailers are going to have to bend on price to get people excited this year.
As certainly discounts, shoppers love those. It's hard to see anyone really out there in full force, Ted, without some of those discounts stacked. In terms of taking advantage of discounts, using gift cards and rewards, what would you recommend to our viewers?
I love the idea of stacking discounts, so you combine multiple ways to save on the same purchase. Use those store promos, and they're going to be abundant again this year. I feel like 25% off is kind of the floor. We're going to see a lot of 30, 40, 50% off. But don't stop there. Use your rewards credit card and pay in full, so you don't owe interest, but you're benefiting from rewards. That's a second way to save on the same purchase. Maybe you go through an online shopping portal like Rakuten or Shop Through Chase. That could be a third way to save. I like those card-linked offer programs, those digital coupons that go by names like Amex offers and Chase offers, and they're tied in with your credit card. So these are all ways that people can save. I also like the early start because it lets you spread out your cash flow. If nothing else, start saving now. You probably still have 6 or 7 paychecks before the end of the year. Use that as your buffer against high-cost credit card debt.
In terms of what we hear from the Fed tomorrow afternoon, Ted, what do you think our viewers should be listening for as it relates to the consumer, how it might impact their own savings?
The path forward is most interesting because there's still some doubt as to whether we get a 1/4 point cut tomorrow or a 1/2 point, but this is only the beginning. This could be a multi-year rate cutting cycle. We'll definitely be looking for clues as far as how much and how fast. It's going to be slower on the way down than it was on the way up. I mean, remember, the Fed pushed rates higher by 5 1/4 points in pretty short order in 2022 and 23, and that's still having major effects on borrowing. We see credit card rates near record highs, car loans and mortgages. They hit multi-decade highs. Mortgage rates have started to come down. That's really the one that has come down in advance. But everything else is still very elevated, whether we're talking credit cards, home equity lines of credit, auto loans. It's going to take some time to unlearn that. A silver lining is for saving.
All right, Ted, we're going to listen to the opening bell. Thanks for joining.
I want to talk a little bit about TCW. Tell us about your investment approach.
Sure. So at TCW, we have an active suite of active ETFs. A big part of our strategy is to invest behind large-scale systems change, transformational, what we call mega themes. We love investing with tailwinds behind our back, and that's what these are. We think they're defining investment opportunities of the coming decade. Importantly, many of these themes, we believe that investors are underexposed to them. Let me give you a couple examples. How we're changing our energy system from fossil fuels to renewable energy, how we're moving supply chains back to North America. We think that many investors, the core of their portfolio, really are underexposed to the companies that are enabling and benefiting from these transformations. And another thing to understand is we're active. So where there's large-scale change, we think that gives our investment process an opportunity to go in and do deep bottoms-up work and express our views in a concentrated portfolio where we size our highest conviction ideas the largest at the top of the book. So that's hopefully a helpful understanding.
I want to dig into the portfolio a bit and especially follow up on these sort of mega themes. If we dig a little into it, could you give us examples?
Yeah, let me give you two. So first, the transformed systems, the ticker is NETZ, N-E-T-Z. We're investing behind the transformation of how we produce, consume, transmit, use energy. You can imagine how complex that is. So we're changing transportation, we're changing buildings, the grid. There's about $5 trillion of what I call non-discretionary investment every year that goes into this change. Huge tailwind. Another one is investing behind the transformation of our supply chain. To understand where we're going, I think it helps to understand where we came from. So we built global manufacturing in China over the past 75 years or so. That's coming back here to North America. Since 2021, there's been about $1.2 trillion.
Welcome back to NYSE TV Live. I'm Trinity Chavez, and if you're just tuning in, we're marking a significant milestone as American Eagle celebrates 30 years as a publicly traded company. We have everybody just gathering behind me. We just rang the opening bell, opening up the U.S. equity markets. We have a lot of green on the screen this morning. We are up about 60 points right now. It looks like we have a strong economy as we anticipate that Fed decision tomorrow. But you know what? We're going to talk more about the journey of American Eagle and what it means for the retail sector. So we're going to bring in Andrew Bjorkman. I'm so sorry, Andrew, I just butchered your name, but come on, join me right now. So he is the regional head for the New York Stock Exchange. So Andrew, how significant is it celebrating 30 years having American Eagle here ringing the opening bell?
It's a huge deal. The number we always hear is the average life of a public company is about 9 years. So to make it 30 years is nothing to sneeze at. Definitely a testament to American Eagle, their brands, their people, understanding customer trends. Very big milestone, and we're always happy to welcome them back to the exchange.
And a lot of people are wearing their best denim looks today, as it accounts for 40% of American Eagle's revenue. And we're getting images right now of the executive team signing the wall as they make their way down to the trading floor. So talk to me about the denim and why it's so significant.
Yeah, I think we love here at the New York Stock Exchange celebrating companies and what they are proud of, their products, their innovations. And to American Eagle, like you said, denim being 40% of their business is something that they love to highlight. So over the years, they've come back in jeans and jackets. Some of the executives here have custom-made jackets. Jay presented our head of listings, Tara, as I think the guests saw, a embroidered that had our facade on the back of it. So very fun, big part of the company and what they do. So we love highlighting everything that American Eagle makes here at the Exchange.
And you know, we are a 232-year-old institution, which have, you know, we can have some rules, regulations, and guidelines, but tell me about sometimes the rules being bent celebrating our listed company community.
So absolutely, you are right. Over the years, with all of the networks that have been here on the floor, we have sometimes had rules that are more properly dressed, if you will, just to make sure that everyone looks good on TV in the background. But for certain occasions, special occasions, American Eagle being one of them, we have bent the rules to put denim down here. So it's always a fun day when you get to show off the brands and the products of the companies. Always a fun one having them back here.
Thank you, Andrew. It was great speaking with you.
Thank you, Trini.
See you later. Now we're going to throw to a few live looks at the floor to capture the excitement that's unfolding here at the NYSE. We'll be right back.
We are just a few minutes into the market open, the Dow opening at a record high. Joining me now is our resident expert when it comes to all things stocks, Michael Renking. Michael, great to have you. And it looks like investors are cheering this retail sales data ahead of that Fed decision tomorrow.
Yes, yeah, I mean, the retail sales numbers came in a touch better than expected, but largely in line with expectations. You know, we still have a lot of uncertainty heading into tomorrow morning. You know, as I was saying, off air, this is probably the most uncertainty I've seen heading into a Fed decision in my career with 24 hours to go. So, we'll have to see how the Fed comes out tomorrow. You know, markets have reacted positively out of the gate here. The S&P 500 is kind of within 0.5% of hitting its new all-time high again. So we'll see what tomorrow brings.
Uncertainty. We'll see what volatility comes tomorrow. So much is riding on this Fed decision. In terms of what you see in volume, are you seeing much conviction behind these near record highs for some of the major indexes and an all-time high for the Dow?
Just with the amount of volatility that we've seen recently, right? I think investors are having a little bit of a hard time, kind of figuring out, where things are heading. I think as we get through, the Fed decision tomorrow, right, that'll give us a little bit more certainty in terms of the path of policy, right? So I think there's still a lot of uncertainty. Friday, you mentioned volumes. Friday is a very, very big day. That's triple witch expiration in the S&P quarterly index rebalances, right? So that's going to be, that is a very heavy day of volume. That's typically, historically kind of one of the heaviest days of the year.
We have American Eagle Outfitters celebrating the opening bell 30 years as a publicly traded company. And the executive is going to join me here in just a few moments. On the same day that we got that retail sales data, it seems as if the consumer is holding up. What's your take?
Yeah, so I mean, if you look at the retail sales numbers, right, it does, like many other things, is pointing to a moderation in activity. We did see a little bit weaker apparel sales numbers in this month, which is, somewhat surprising given it is kind of that back to school, sort of shopping month. There was a lot of, there was a big jump in the non-store retail numbers, which is suggesting that we're seeing some online, kind of some more online shopping. Amazon Prime during the month of August probably played a part in that increase. But the consumer has continued to show resilience throughout, throughout the last couple of years as people have, kind of continued to call for kind of the demise of this consumer, and we haven't seen that. I think that really goes back to the labor market, right? And as long as people have jobs, right, they've shown this propensity to spend, and I think unless we start to see a real significant shift in that labor market, right, the consumer will remain resilient, and that's what the Fed's trying to get ahead of at this point.
What should investors be prepared for when we get that decision at 2 p.m. Eastern tomorrow, the Fed decision, as well as those comments from Fed Chair Jerome Powell at 2:30 p.m. Eastern?
Yeah, so I think people are going to focus very much on that dot plot, right? So there's complications in either direction. If they cut 50, they're going to need to kind of talk markets back from expecting a 50 basis point kind of rate cut at subsequent meetings. And if they only cut 25, right, you're going to have to look at that 2024 dot to see if that suggests 75 basis points or 100 basis points of cut. So market expectations have moved pretty significantly higher. So two things I'd pay attention to from a market perspective, right? We're right around those all-time highs, so that gets tricky, right? When you start to break to new all-time highs. So if you see a breakout, you want to see that happen with some vim and vigor, and you want to see some commitment to strength, holding above those highs, kind of on the back end. And then from the bond market perspective, right? If you look at the 2-year yield, it's just trading at historic wide levels relative to the Fed funds rate, right? Which is not necessarily suggesting, right, that the bond market is convinced that we are in this kind of soft landing kind of path, right? So if we do kind of see that bond market firm up and you see that spread to the Fed funds rate start to narrow, right, that could suggest that the bond market has, feels like the Fed is right, kind of gotten itself in the right spot, right, and is no longer behind the curve here.
All right, Michael Renking, I know we'll have a lot to talk about here in the coming days and weeks after this Fed decision on Wednesday. Michael, thank you.
Thanks for having me.
All right, let's take a break and we'll be back on NYSE TV Live after this short break.
So Jeff, you became CEO of Noom just slightly over a year ago. What attracted you to the company?
For one, it's the powerful brand, right? Noom is a brand that's really helped change so many people's lives, and it's a very well-known brand. And so I think that was the first thing. I was also kind of looking for something else, and I saw Noom as having this potential to be that difference-making platform. And I think it was the mission of Noom to empower everyone everywhere to live better longer that really kind of got me in and attracted me to the opportunity.
So tell me about Noom. Talk to me more about the company and also the announcement that you're making here today.
Noom really entered the zeitgeist as a psychology-based platform for habits, right? So it would help drive sustainable weight loss outcomes. One of the things that attracted me to Noom was the opportunity to help usher Noom into this age of the GLP-1. And what we're announcing today is Noom is providing the med with pathway off the medication. We're providing both GLP-1s to help you kickstart your weight loss journey, and we're really driving accessibility with the med pricing. It's $149 to start, and that delivers the med to your door within 7 days. And then the companion program, the GLP-1 companion with muscle defense, what that really does is it helps you take the meds in a healthy way, while also you can enable a taper protocol to come off the meds altogether. Folks generally come off the med pretty quickly. 6 out of 7 people stop taking the med once they start. That becomes a problem if no habits have changed, because then they just regain that weight and they basically end up potentially worse off with a condition called sarcopenic obesity. And so with Noom GLP-1 Companion, we're providing the exercise, the diet, the lifestyle, really the mindset shift.
Tara Jejic is joining me now. She is the head of U.S. listings on the NYSE. Good morning, Tara. I mean, we're seeing a lot of denim. I love your look. And can we just talk about your jacket they gifted you in the boardroom?
This is a keeper.
Yeah.
Customized, it goes with the experience.
Can you just turn around real quick? Because it's actually like the Exchange's logo embroidered on the back of this denim jacket. It's amazing. It looks great. We have a lot of denim on the floor. So let's talk about how the Exchange sometimes breaks the rules for listed companies.
So we have 2,300 listed companies from 48 countries around the world, representing 40 trillion in aggregate market cap. It's our job to protect those issuers and to protect investors. So we can't break rules when it comes to qualitative and quantitative listing standards and governance and fair disclosure, but we can break some rules when it comes to having fun and loosening the dress policy. Denim is appreciated.
Can you speak more to how the NYSE stays close to customers and gets feedback to really continue to evolve our customer base and overall NYSE community?
Well, I was thinking about it this morning when I was meeting the American Eagle team, and their physical locations, retail is not just shop. It's a destination. It creates a social activity. It's a way of engaging a community. It's an experience. And here at the New York Stock Exchange, when you come to 11 Wall, it's also an experience. But just like American Eagle, we're meeting our customers. We go out on the road, we get in front of them, boots on the ground, and host roundtables. But we also engage through social media, through different vehicles to really communicate in a way that demonstrates that we're there to be their best partner, including wearing their apparel.
Amazing. Well, thank you so much, Tara. I'll let you get to continue the celebration.
Thank you, Trinity.
See you later. Now we're going to take a quick break, and when we come back, Kristen's going to be speaking with Jennifer Boyle. She is the President and Chief Executive. We'll be right back.
I was at university and I was teaching design programs, and they were really complex and hard, and I thought they should be online and collaborative and simple, and got to work trying to do that with our first company, Fusion Books, and then now obviously Canva.
And you know, this is the first time that you've hosted Canva event like this in the United States. Tell me about the significance in it being here in Los Angeles.
We are extraordinarily excited to bring Canva Create here to Los Angeles. It's one of our largest markets in the US. We have more than 400,000 people designing each month here. We've created 1.4 million designs in the last month alone. And so we're extraordinarily excited about being able to bring all of the magic here to LA.
And tell me about how Canva is helping revolutionize the way people create, the way they remain innovative and ahead of the curve.
Our goal is to give people all of the tools that they need at their fingertips so they can take their idea and turn that into a design, have no friction between those 2 points. And so over the last decade, that has meant that we've invested really heavily in our presentations products, giving everyone all of the ingredients that they need, all of the AI tools that they could possibly want at their fingertips.
And you know, during your first year of starting Canva, your initial user base was over 750,000. Now that number has grown to over 185 million around the world. That's hugely significant. I mean, how does that make you feel when you think of how much you've grown?
We have the most amazing community, and seeing what they use Canva to create has been incredible. So seeing people get jobs because they've created a resume, or land a gig because they've created an amazing presentation, or be able to brainstorm a new idea with a whiteboard. All of these incredible stories really warm our hearts and keep us motivated to keep going.
Can you think about some key milestones that you have achieved, both personally and professionally, that have helped contribute to Canva's growth?
There's not one moment, but it's kind of like all of the moments together. Every time.
Welcome back to the trading floor here. I'm Kristen Scholler, and joining me now is Jennifer Foyle, President and Executive Creative Director of American Eagle and Aerie. Jennifer, congratulations, 30 years as a publicly traded company, American Eagle Outfitters, and you've been with the company for more than a decade. What does this mean?
Everything to me, and thank you, Kristen, and the New York Stock Exchange. And we've been on the NYSE for 17 years now, so public for 30, but 17 here, and what a day. We're just so excited. We're celebrating our brands today. American Eagle is stronger than ever, and we're ready to get this thing moving into the next decade.
Talk to me about that strategy from a creative perspective and from a sales perspective as the president, how you want to take this brand into the next 10 years.
Well, sure. If I think of the heritage brand, American Eagle, wow, we have such a strong foundation on Live Your Life, which we just launched today. Coco Gauff is our representative with the campaign. We have a collab, and that's just an example of where we're headed into the future. We're going to get stronger. We're going to build these brands, and we see growth for this company. I'm very excited about that.
I'd be curious to get your take in terms of online versus in-store retail, how you look at that, especially as we're now amid back to school.
Well, certainly back to school has kicked off in a very positive direction for our companies. So, more to come. We're still getting into, Q4. But as I think of the omni experience, I'm not a big fan of the word omni. I just love customer experience. Where our customers are, where they're at, we need to be there, and we need to sell them what they want. So we have an incredible digital channel, but our stores have never looked better. We just had our earnings call, and we had really positive responses from the investors and our community. So, it gets better. Holiday gets even better.
What's a draw for shoppers to come to American Eagle versus an Aerie per se? I'm sure you want them to look at both, but how would you differentiate the two?
Well, Aerie, let me remind you, is, we really launched the platform about 10 years ago. So it's our anniversary in Aerie as well. Aerie Real is our campaign, and it celebrates the community, the women in our community. We use real women. We listen to them. And we were the first to do it. I'd like to say we were trailblazers. Really, we were. When we did this 10 years ago, we did not airbrush our models, and now it's become so much more. So thinking about Aerie is more about the layers, right? Intimate apparel, but we also launched Offline by Aerie, which is doing amazing. Our leggings, you need to get one, okay, or two or three. They're the best leggings out there. We've gained market share in that category, and there's still growth there. Offline is only getting started, and that's, as I mentioned, our active business. Going to AE, look, we're the #1 denim brand in our age demo for both genders, and we have more to offer. We're going into AE 77. It's a step up from our current age demo, and we're going to celebrate that customer too. We want them to stay with us.
I'm curious in terms of the campaign. You mentioned using real women, not airbrushing any of the models who are part of your campaign. How is that resonating with shoppers?
Incredibly well. Our community is one of the strongest out there. In fact, we just launched our foundation over a year ago. We're raising so much and funds and for our community to give back to our community, and we've only just begun. This is about celebrating our customer, celebrating women of all types, their beauty, their natural beauty, and there's more to come. We have Aerie 2.0 on its way.
Talk to me about what else is in the pipeline in Aerie 2.0.
Well, Offline, as I mentioned, incredible business for us. We've gained market share in denim. While there's a slowdown in that side of the business, we're seeing growth. So excited about Offline. Aerie, we're offering new categories. Sleepwear, we just really launched in back to school. They're wearing it out. I mean, they're going out in their sleepwear. We love it. We're excited about that business. There's more to come in Q4, and we will continue to launch and innovate, not only just in Aerie, in all of our brands.
I read that denim accounts for 40% of American Eagle Outfitters' sales. Do you see denim still being a key part of the brand and the offerings going forward?
Absolutely. It's our core competency business. It gets better. We have so many new fits that we're introducing to our customer. There's more to come. We've become a lot more nimble with our fits because fits are changing faster and faster. So we're right there with the customer. Where she is, we have their fit.
Good. Jennifer, thank you so much for joining me. That's Jennifer Foyle. She's a president and executive creative director at American Eagle Outfitters. Let's take a short break and we'll see you on the other side.
So let's talk about Windrow's technology. Tell me about the company and what you're doing here.
Sure. So my name's Wen. I'm the founder and CEO of Windrows. So at Windrows, we make zero emissions, heavy-duty long-haul truck. And our goal is to make transportation or trucking both cleaner and actually cheaper. At the same time, we make the experience far better for the driver by providing so much more comfort and technology inside to the driver's cabin. So therefore, we really try to make the whole experience far better than it's been really for the last 100 years of diesel trucking.
So talk to me about how you're different from your competitors.
So I think a couple of things are different. So if you look at the design of the truck, everything about the truck is different. I would say we're one of the only two companies in the world that are designing a beautiful new truck from the ground up. There's ourselves, Windrows, and of course there's the Tesla. I'm 34 years old, and the company is a little bit more than 2 years old. So our youth, our newness is one key factor that drives our design to be completely new and from a clean slate. So what that means is if you look at the truck, we have more range, more space, more power, more efficiency, and more comfort, which means more space and more safety and protection for the driver than any other truck there is. Another key difference is, to our knowledge, there has yet to be a truck that's been deployed or driving on the road in China, in Europe, also in the United States. So to this day, our truck has been running already in China, in Europe, where we completed a cross-Europe trip from Belgium, Antwerp.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here with Trinity Chavez, and we've got so much retail to talk about. We've been seeing some denim on the floor here of the New York Stock Exchange, Trinity, and so aptly timed considering that we've completed back to school, and before we know it, the holidays will be here.
Yep.
What are some of the comments that you've heard from retailers and executives that you've spoken to about how to take advantage of rewards, especially during this time of the year?
Yes, I mean, and who doesn't love shopping, right? I mean, I know I love shopping, and I actually spoke with Fetch, a CEO, all about how he's revolutionizing the whole shopping experience when it comes to, your e-commerce purchases, right? And we talked to him on taking stock, and we're actually going to air that later on in one of the other shows. But just a little preview of what we talked about is, for those of you who might not know, Fetch is an e-commerce, basically a shopping app, which you can take pictures of your receipts to earn rewards, and you can actually get gifts at some points. You build up the points. My mom uses this app, and then you get credit toward your favorite stores, whether it's groceries or any sort of amenities that you might need, and they're expanding into the retail sector. And so, that was a very exciting conversation that we had with him on the trading floor.
It's definitely a great way. I think that more and more shoppers have been turning to earning some points and rewards as inflation has been taking hold. We've been talking so much about the Fed decision that's on tap tomorrow, what it means for customers, hopefully for them, of course, lower credit card rates, because we see those in credit card debt at a record high. But so important heading into these holidays. And Ted Rossman, who joined me earlier from Bankrate, he was saying more discounts on tap this holiday season.
We love discounts.
So I'm sure American Eagle will be leaning into that as well. What else is on tap for taking stock?
Well, we spoke with Russ Scroll, who we're going to be airing that. Again, he's the CEO of Fetch. We're going to air that on the show. And then we have Money 2020 coming up in Las Vegas, and we're going to be doing remote shows out there, a series of taking stock interviews, speaking to some of the leading experts when it comes to fintech, tech, banking, finance. All of them are going to be on the ground in Las Vegas, my home city. And so I'm really grateful that I'm having the opportunity to be able to cover that. And of course, you and I are going to be having those live banters back and forth and live segments too for NYSE TV Live. So those are just one of the many projects that we have going on. And then of course, it's never a dull moment here. We have Tech Summit that's coming up. And for, everybody back at home who's watching, the NYSE hosts over 3,000 events every single year. And so we have Tech Summit coming up. We have the IPO Summit. We have so many things on tap that's taking place on the 6th floor, one of the many iconic rooms that we have here at the Exchange on the corner of Wall and Broad Street in Lower Manhattan. And so a lot of exciting things coming up.
That's exactly right. September and October always seem to be very busy months, right? Everyone's back from summer vacation, kids are back in school, and we do have a busy docket on tap between Climate Week as well. I know we talk so much about sustainability here at the New York Stock Exchange.
UNGA.
That'll be in focus as well. So we've got some great shows coming up on NYSE TV Live. A reminder to our viewers, you can join us every weekday, 9 a.m. Eastern, down here on the floor of the New York Stock Exchange. And Trinity, we've been talking about, you were talking to Tara about this, breaking the rules with some denim down here on the floor of the Stock Exchange.
I know, I think I'm going to go look for a denim jacket.
I think we need to go break some rules, because we're not in any denim this morning.
Well, thank you all for tuning in to NYSE TV Live. And everybody could tune into our OTT app that we have, NYSE TV. If you don't have it already, make sure you download it to tune into more episodes of Taking Stock, Floor Talk, ETFs. We have so much content there for all of you guys to tune in to watch.
And breaking down what this very important Fed decision tomorrow means for you, your money, and your investments. We've got it all covered. That's going to do it for today's coverage at NYSE TV Live. I'm Kristen Scholler.
I'm Trinity Chavez.
Politics, looking at the betting sites, probably market has Harris at 51%, Trump at 40%.
I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.